Get it. Welcome to technical analysis class, lesson 1. This is part 3 of 3. So make sure you already taken part 1 of 1, part 2 of 2, part 3 of 3. Discord family, let's get part 1 in the history books, and then we'll move on in the future very soon to lesson 2, where we're going to talk about even further technical analysis. If you need a platform to do technical analysis, use the Webull link. It is linked in the pinned comment. Now, without further ado, let's go over the quiz. So this is quiz 1, and again, if you've done well on the quiz or not, let me know in the chat what you got, and you can see what everyone else has gotten so far. But I want to give a salute to y'all. And again, this is for the Discord family at no additional cost to you. Let's learn and let's win. So quiz 1, the fundamentals of technical analysis, basically parts 2 of 3. And who am I on the Discord? At Keenan Grace. So if you need me on the Discord, mention me at Keenan Grace. And we're going to go over this together. So you ready? So let me write this exactly as seen so you can see it well. So at Keenan Grace. So that's who I am. And it says this: do you understand that technical analysis is not perfect and that it cannot predict the prices with 100% accuracy 100% of the time? So with that being said, we have to understand that you basically in these cases, let me fix my mic. In these cases, you have to say, okay, I'm going to join technical analysis with news catalyst to give me a more accurate picture of what's going on. So yes, I understand that it's not accurate 100% of the time, but it works most of the time, and that's what's important, rather than just randomly guessing when you should buy and when you should sell. So technical analysis is used for what? Identifying patterns in the market and trading based on those patterns. Absolutely, that's 100% what it is. So let's take a look at this. This is a candle, and remember how candles work. So let's zoom out just a little bit. We have the wicks of the candle, which are on the top and the bottom, and then we have the body of the candle. So if we look at this green candle, the lowest it's gotten in this specific time frame is all the way down here at 86. The highest it's gotten is at the top of the wick at 112, and then the body shows us that it opened up at this price at 90, and when this time frame was over, it closed out at 100. So now that we know the open, the close, the high and the low, and when you look at platforms like Webull, then what you'll see is, and George says, is this the first part? No, this is part 3 of 3. So now let's keep it going. When you look at something like Webull, you'll also get to see the volume, how much of the stock or crypto or whatever it is was traded in a particular time frame. So now here we go. The question is, and let's zoom in, what was the price of this candle, or what was the price of the stock when this candle opened up? And that's it right here at 90. So at open, we're at 90. And then it says this: look at the body of the candle. What was the price when it closed? So we know that it opened up here because this green rectangle is the body, and it closed up here at 100, right? So then the answer is 100. And then look at the body of the candle now, and what is the price when it opened? So we see a red candle now. It's literally the opposite. The open and the close are opposite on green and red candles. So this one opened at 100, but then it dropped all the way down to 90. So then it asks, what was the price when this one opened? And the answer is 100. Now, let's see it. And it says, look at the body of the candle. What was the price when it closed? And like we said again, it opened up here, and then it closed down here. It got as low as 86, but it got to 90 when it closed at that time. So it closed at 90. Now, it says this. Look at the wicks. And remember, the wicks are the top and the bottom of the candle. And it says, what is the highest price reached in this time frame? Easy, right? 112. That's as high as it got. All right, now let's keep it going. And it says this. It says basically, look at the wicks of this candle. What was the lowest that it's gotten in this time frame? 86. Easy. Now let's check this out. Technical analysis works because what? It works because trends are identifiable, because trends are not identifiable, or there are no trends. So we know that technical analysis is, they say you're trying to find a trend, aka a pattern. You want to find a pattern, and you have to believe that patterns even exist in the stock market in order for you to capitalize on them. So trends are identifiable. You have to remember that. And then right here, what is the best way to describe the blue line in the image below? So take a look. This is Apple stock, and we're looking at the 1-day chart. So every single one of these candles is representative of an entire day. When you look at this blue line that this blue arrow is pointing at, you can see the Apple's been going up and up and up and up, and then boom, it hits this 182 level, and then it comes back down. It goes back up and hits this level again, comes down a little bit, comes up and hits it again for a total of about 3 confirmations on this resistance line. The resistance line resists it from going up any higher, right? So Apple, we wish it would have went even higher than this, but this resistance line was strong. What is a resistance line? This just means that there are so many people who either have their limit sells ready, saying, look, if Apple hits 182, I'm out, right? So just like that. So now, basically, with all of that selling pressure, we get a big candle after a resistance line, which is indicative of a longer downtrend. So you know to ride puts after you see something happen like this. So then, what is this blue line? Is it a level of nothing? No, we know it's something. Is it support? No, there's no support there. It's a resistance level. Okay, now, let's check this out. What is the best way to describe this blue line in the image below? So when we see this, oh, look, Apple actually came down here and bounced up, and then it went all the way up, all the way up, all the way up, and then it came back down. It looked like it was going to approach it, but then it kept going. What can we call this? There's multiple names you can call this. You can call this the floor. You can call this a support line, because look, when Apple goes to this line, it bounced off of it, right? So it's a line of support. Where do lines of support come from? They come from people who are ready to buy it right here. They said, you know what? If I see Apple under 150, I'm loading the boat. And then a lot of people, even institutions, are thinking that. And then this is where these lines of support come from. A lot of buyers down here. So then it shot it all the way up there to 182. Now, what is this? It's a level of support. So I'm going through this kind of fast. So if I get one wrong, I'll just do it again. But I don't think I will. We'll see, right? Nobody's perfect. So here we go. A level of resistance can do what? Resist the price from going any higher? Absolutely. And I'll try to take my time so I get it right the first time. So resist the price from going any higher? Yes. And we just talked about that. And the level of support, like we talked about up there before, is it resisting the price from going any higher? No. It provides a level for the price to bounce back up to higher prices. So if I'm losing any of you here, I want you to remember, this is part 3 of lesson 1, and then the quiz, and then this is the review. So make sure you take those other parts before continuing on with this. So then let's check this out. Higher highs and higher lows are characteristics of what? Consolidation? No, because that's trading sideways. A downtrend? No, right? Because things aren't going higher in a downtrend, they're getting lower. It's characteristics of an uptrend. And you have lower highs and lower lows, right? So it's not getting higher, it's getting lower. So this is not consolidation trading sideways, or it is a downtrend. The highs are getting lower and the lows are getting lower. This thing is headed down like down rockets in the chat. So here we go. In this, if a stock is not going up much, not going down much, but is trading sideways, this can be described as, so look, you see a high, you see a low, and it's just bouncing left to right, basically in this channel right here, a resistance level, a support level, and it's not really breaking out of there, it's not really breaking under here. So then this is consolidation, aka trading sideways, as it's called on the stock market. So we have this, a price change of a stock, or the price changes of a stock were placed into this green uptrending channel. What is the blue line pointing at? What is this here? And we know this is an ascending line because it's going up. It's a line and it's going up. So it's an ascending line of what? Support. So when you see the stock bouncing off of this line, it's an ascending line of support. And this one up top is the ascending line of resistance. So we have our blue line, which is what this one is asking about, or the blue arrow is pointing at what? Our ascending level or line of support. And then we have this, the price changes of a stock, again, are marked in this channel, this uptrending channel. And what is the red arrow pointing at? Notice it's resisting. So look at this. It's going up and then it can't really burst past that. So it's resisted. However, it's a resistance line that's ascending. It's getting higher and higher and higher. As the stock price is getting higher, this line is being respected. So then you can sort of extrapolate out to the future and see if this channel continues, then that means that you want to load up somewhere right here when it comes down again a little bit before continuing the uptrend. So then that would be you trading off of a pattern and trade with the charts, not your hearts, like we always say. So this, let's just double check. It said the red arrow is pointing at what? The red arrow is pointing at an ascending level of resistance. So then we have the double top pattern can be a sign of what? So you see this, the stock is moving up, 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 up. It gets here. There's so many sellers. It's coming crashing down. It goes back up, hits that same level again. Those sellers are still there in this case. So then you have a double top pattern, which is a sign of weakness and a sign of sellers. So we see A, a sign of weakness, B, a sign of selling pressure, C, strength. There's no strength here at a double top. It can't get past. If it was strong, it would burst through it. So we have weakness and selling pressure, which is A and B. Now we have a double bottom, which is literally, look at this. This is the W, or this is the letter M, right? You see the letter M, and you have your neckline right here. The real sign of weakness, the first signal is this double peak, right? But the real sign of weakness is when this thing gets here and breaks this neckline, and then you can see giant red candles. And then what they do is they generally trigger everybody's stop losses, and then it just drops like a rock. So then remember, the first sign is a double top, and then the confirmation on a double top signal is when it breaks this neckline or that previous low, right? So we have a low would have been here. We have a higher low. And then this could have been an uptrend if we didn't hit this second peak and then came down and then broke this low. So we broke the neckline, right? So then that pattern would have just broke down, and then it would have been a sign of weakness. So now let's look at the exact opposite. Notice this. This is kind of a double bottom where it confirms on this level of support basically 2 times. 1, 2, and then it continues up. But look, it breaks that neckline again, but remember, it's an M upside down, aka a W. So then it breaks the neckline and then rocket, right? It came back down a little bit, and then it showed support because previous resistances become new supports, and then it continued its uptrend. So now the question is asking us, double pattern or double bottom pattern can be a sign of what? Selling pressure? No, because this double bottom, this is not telling us that they're selling. This is telling us that they're buying. It's a sign of strength. Yes, it is. Is it a sign of buying pressure? Yes, it is. So B and C. And then we got a limitation of technical analysis could be, so you see this false breakout right here? It broke out of our channel. This can also be called a false. Yeah, this is a false breakout, right? So that's pretty much it. So let's keep it going over here. And then a limitation can be, there are no limitations. We know there are limitations, right? Not available? No. Perfect signals? There's no such thing as a perfect signal. A false signal. You think that this thing broke through the level of resistance and it's about to go on a rocket. So then what happens is everyone starts buying calls, right? And when this happens, when you see a false breakout, remember who you're playing against. You're playing against Wall Street. And on Wall Street, they basically know that, oh, everyone's going to get suckered in to buying a call on the first candle that breaks out of a trend. So then what the short sellers are going to do, what the institutions are going to do, and even other retail investors who want to take advantage of what's going on right now, they're going to just start selling it right here and then ride the put all the way down on a false breakout. You have to wait sometimes for more confirmation, meaning more candles to be up and living up here and respect this line of previous resistance becoming a new support. So a limitation of technical analysis is false signals. And then we have this. You can reduce the frequency of false signals by, like I just said, waiting for confirmation. So you have literally no confirmation up here. You have one of them broke through, one of them kind of lived up here. So I won't say no confirmation. You have a little bit of confirmation, and I'll zoom in, but not enough to really solidify what you're trying to do. So let's go back up. So look at this. You can reduce the frequency of being fooled by false signals. And if you take the risk, remember, higher risk, higher reward. But remember, it's a higher risk. So you got to be willing to jump out if it went wrong on you. So we broke out with this candle, and then this one candle lived up there, right? You see how on the wick of the candle, it got pretty high. But look at the wick of this top candle up here. That means the high is shot up, but then it came back down. And then you get this next one, and the wick is a little bit shorter, and then you get this next one, and you're waiting for this one to turn green, but it's turning red. Okay, so we don't have enough confirmation to load up on the calls and ride this wave up. And then look, you listen to the charts, and then it's telling you not to get a call, and then you just wait. And then you see that, wait, it's back in that channel again, finding resistance. And then next thing you know, it crashes like a rock because the buyers can't keep up with the sellers. So then you can reduce it basically by waiting for confirmation, reduce the chance of you getting fooled. And it says this: confirmation, like watching multiple candles break above a level or below a level instead of just one candle. So then that's our answer. And then a false break below is best described as, not just described as, but best described as. So you see this channel of consolidation. This stock is trading up here, hitting resistance, one confirmation, two, come down here, confirmation, confirmation again. A confirmation means it hits your line and then respects what you expected it to do, right? If we have a level of resistance, we expect when the stock goes up there to hit that level and then respect the resistance and come back down. It goes up there, respect it again. That's another confirmation, comes back down, hits our support, confirmation, goes up, hits the support. Is this really a support? Oh yeah, it confirmed it and bounced off again. And then it came back to our support. We expected it because remember, when you're doing technical analysis, you want to trade off of the trends. You expected it to basically bounce off of your support, but look, it broke your trend. So then you're thinking to yourself, okay, it broke the trend. Is it now time to buy puts because it's headed down? What do? You wait for it to give you some confirmation, meaning not just the one candle, the one giant candle that's through there, and then you get one. And notice it tried to jump back in when you look at the wick. It tried to jump back in. And then the third candle, in this case, really jumped back in. So if you got into a put option right here, I wouldn't go all in. You may be rewarded for taking this risk and getting a put right here on the break, because you don't know it's a false break until you see it in hindsight, because at that point you need to wait for confirmation. But then if it jumped back in, you would need a stop loss. I'll put my stop loss at whatever price would be like right here, because then that means it jumped back in. And then if it came back down again, then I would re-enter the play. So now this false breakdown is a real breakdown? No, it's a false breakdown. Yep, trade with the charts, not your hearts. So now, technical analysis is best used in combination with news catalysts. For example, the market is likely to continue a technical downtrend if very negative governmental news is announced. And yes, that's true. If the market is going down and then the Fed say, hey, look, we're raising the rate. We're doing 1 million rate hikes this year, 25 rate hikes this year, and every single one of them is going to be 5%, right? 500 basis points. Then that would be not good for the overall market, and it would continue to downtrend. Some drastic governmental news or something like that, then I would tank it. So now, after this quiz or after this live stream that we're in right now, you can go to class questions, and then that's in the Discord, and then basically you can share your test results and share any questions that you have. You can add me in there if you got any questions too, or talk to the family. So then we're going to click done, and I hope I got 100 on this, but if I got any of them wrong, then I'll clear it up. So let's check it out. So you view your score. Boom, 23 out of 23. Let's go. Let's go. I'm pumped about that. So again, I love y'all. I appreciate y'all. And I will see you in the next one. Be prepared for not too long from now. I'm working on the next fundamental, or actually technical analysis class. We're going to look at more indicators and more charts. So again, Discord family, this one is for you. I love y'all. And again, I give you this at no additional charge, just for being a part of the Discord. I'm going to keep adding value, keep adding value, keep adding